everyone, good morning. You're watching Market Fatafat right here on ET Now, the show that promises to spot all the hottest movers and shakers in trade. Markets, meantime, trying to find their feet, flitting between the red and the green, and that's the status currently. 11,925 for the Nifty. Sensex as well, absolutely flat, just stuck about at yesterday's level. But before we kickstart the show, we have the management of Music Broadcast to talk about that all-important deal. It looks like Music Broadcast is going to be tuning into Big FM. Yes, buying it from Reliance Capital. And to talk about this important transaction, we have with us Apurva Purohit, Director of Music Broadcast. Apurva, thank you for joining in on ET Now. Congratulations on the deal. Let's talk about these plans. 1,050 crores is what you'll be shelling out, and that's, I think, a 24% stake you'll be acquiring initially. So tell us, how is this transaction going to play out?
Let me explain the deal to you. So initially we will be investing 202 crores to acquire 24% stake, post which of course this is subject to definitive agreements getting signed, etc. Post which we will be applying for MIB approval, and we expect the deal to culminate, the control transaction to culminate by March 31st, 2020. Which is when the lock-in period of certain of the stations expires. And we expect to get the MIB approval in 6 months.
Okay, Apurva, so what does this bring to the table for the company and the combined network? How many stations is it going to own? Which are the cities which you will now have a stronghold on?
So Radio City has currently 39 stations, and we have a presence in all the large metros and mini metros in the country across all the 4 zones. With RBNL, we will be adding 40 more stations, so that takes us to 79 stations totally, which makes us the largest network in the country. Between both the networks, there will be a multiple frequency operating in all the big metros, and 30 new stations where Radio City doesn't currently have presence. So as a consequence, the reach of the entire network will go up from 62% of the FM footprint to around 82% plus, which again is amongst the highest reach in the country.
Apurva, how are you funding this acquisition? What's the timeline in place?
So as I explained, the timeline is approximately a year from now, because the ministry approvals itself will take 6 months, and the lock-in expires on 31st March 2020. The initial funding of 202 crores happens from MBL's internal accruals. 500 crores of debt we will be carrying on the RBNL books, and that will be paid subsequently through the RBNL accruals themselves. The balance funding, whatever the final amount that comes to basis, adjustments, etc., will be funded from long-term borrowings by MBL or internal accruals. The last, of course, is the least preferred option for us, because, as you know, we prefer rewarding our shareholders. So this is broadly the way the funding will proceed.
Okay, Apurva, let's shift focus to your fourth quarter numbers then. And I think what particularly stands out over there is the very healthy margin. So the question is, will this 35% margin range sustain? And overall, what were the key growth drivers for the fourth quarter?
So as you're aware, this year we've delivered very healthy margins of 35% on an annual basis. Quarter 4 was delivered margins of 39%. So we certainly believe that the margins will only be on an upswing, primarily because radio is a fixed cost model business, and operating leverages in this business are very high. In fact, some of our mature markets deliver margins as high as 40%, 45%. So definitely margins will keep on improving for this business.
What about ad revenue? What's the outlook on that, and what was the impact of the general elections and state elections on your revenue?
As you are aware, last year has been fairly muted for the economic conditions were average. There was a fair amount of uncertainty in the market, etc., etc. So given the fact that there is a stable and incumbent government back in place, we obviously expect sentiment to improve in the short term, and advertiser spends to only go up in the coming year. And we obviously hope that the government will look at several structural reforms and increase their own spending so that consumption gets fired in the country. So that is our expectation of the coming year. As far as the elections are concerned, yes, there was election spending in the last year, but it sort of got spread between Q4 and Q1.
Okay, Apurva, give me a guidance over here. I mean, analysts are saying that you will be able to do a revenue growth in early double digits over the next 3 years. Do you think you will be able to do that? Are you on track?
I think we should be on track. Obviously, a lot depends on how the economy plays out, because as you can see from a margin perspective, we are in a very healthy position. In a muted year, we've been able to deliver 9% growth. So if we get a bit of tailwinds behind us and the economy fires in the medium term, certainly 11%, in fact better than 11% CAGR is quite possible for the radio business.
Okay, Apurva, thank you for joining in. Congratulations once again on the deal, and wish you good luck for the coming months with a big FM being added onto your portfolio. Well, from one management to another, Jindal SAW delivered its fourth quarter numbers last week. It was more or less of a mixed bag because yes, the top line growth was strong.